All right, we are back in action. Good morning, everybody. Welcome to the morning show here on Stock Market TV. Spencer, JC, and Steve with you in the house, and Alfonso, as always, Chartmaster, obviously. What's in store today? Got to talk about Nvidia. It was kind of the story of the end of the year. If you were paying attention, it was a story yesterday. There was a little keynote at the CES show. Jensen Huang did his thing. Nvidia is the most valuable company, yada, yada, yada. We'll talk about that and what it means for semis, what it means for the market more broadly. We have some charts from JC's conference call last night. Just a sample, just a couple. There was, I think, 130 charts last night. Maybe we'll share like 2 or 3 today. But obviously, if you are a member of AC Premium, you got all those charts last night. We'll have Todd Sohn on the show today. We'll have Kenny Glick on the show today. And that is the plan. So let's go. Smash the like. Hey, subscribe to the channel. Do all that good stuff it says to do on the bottom of the screen there, right? Subscribe, notification, right? You know what to do.
Oh, we back. We back. Shout out Canada. Who loves Canada more than me?
So why the Montreal Expos gear this morning?
I'm just kind of in a Montreal Expos kind of mood. You know, you're
yeah.
like in a shit brown kind of mood, I guess, right?
Didn't their prime minister just quit?
The Expos prime minister, yes.
I mean, you know, is that a surprise that these communists just quit when things aren't going their way? Like that's
dude. Other countries are so weird. Like their prime ministers can just quit. They can have elections whenever the hell they want, right? Yeah. It's so bizarre how other countries do it, right?
Are they going to be the 51st state? Didn't the Orange Julius say that?
I like how we do
it. The 51st state.
I don't know.
The UK is nuts. You think we could pull that off in America? The way they have like these like snap elections,
dude. It's crazy. It's everybody. It's everybody across in Europe over there. That whole part of the world is weird.
I like our system because could you imagine talking about elections that often? We lose our mind.
Can you imagine just deciding I want to have an election and then there being an election like next week? Like
if let me tell you this. If we what is it? Is it an annexation? Is that what happens? Is that the word?
Okay.
Sure.
Or is it a merger? What's the proper nomenclature for us acquiring Canada?
It's M&A is what it is.
It's M&A. Okay, so if we do an M&A between the United States and Canada, can we bring back the Montreal Expos? Like that should be in the agreement.
Sure.
Who's your favorite Montreal Expo of all time?
It would have to be Vlad.
Rusty Staub. How you doing? Shout out Rusty Staub. Rest in peace. What about the Hawk? Andre Dawson from Miami, Florida, Southwest High School. Shout out Andre Dawson.
Cool.
How about the fact that we were in Chicago? I was rocking my Andre Dawson jersey at the Cubs game. And who sings Take Me Out to the Ball Game? None other than Andre Dawson. You can't make this shit up. And you're telling me that this isn't a simulation? Stop it.
Did that really happen? I didn't know that.
That really happened. You were there.
I was there. I was there.
You were there. I couldn't believe it. It was like what? It was like what? Really? Anyway.
Shall we? I guess.
Hit it.
All right. We got the Dow futures up this morning, 110 points. That is slightly above 43,000 for the Dow, 0.25% to the upside. 11 handles for the S&P 500, 6,030. NASDAQ 100 futures are flat this morning, just under 21,750. 30-year bond futures down about 0.25%, under 113, by the way, for 30-year bond futures. Crude oil up 0.5%, pushing 74. Crude oil continues to inch higher. Copper up 1.25%, 420 for those who partake in copper. Gold up 1% this morning, 26.75. Silver up 1.25%, $31 per ounce, and the volatility index flat this morning at 16. Over in Funny Money Land, we got Bitcoin down 1,500 points. That's 1.5%. 100,700 for Bitcoin. Ethereum down 1% and change. 3640. Solana down 2% this morning, 214. Binance down almost 1% this morning, 725. Total crypto market cap, Mr. Spencer Israel, 3.47 trillion,
Cool.
with the Bitcoin dominance hovering right around 57.5, which is pretty much in the range that it's been.
Yeah, it's like it hasn't changed.
How do we feel about let's welcome back Mr. Steve Strazza. Still hasn't made it home yet, somewhere south of Nashville. Are you in the great state of Tennessee?
No, I'm in the free state of Florida now.
Woo! You are in
free
the
state.
state of Florida. Isn't Tennessee one of those kind of you could do anything you want states too, though?
Tennessee was lovely. Absolutely.
I'm into Tennessee.
Tennessee was one of those places for me where the people were just so nice. Like that was one of the biggest things. Like it was just what an experience everywhere we went.
Wait, so tell us, hold on. So you were in Connecticut.
Yeah.
And then where did you go from there?
Washington, D.C. And then to the Smoky Mountains. And then from the Smoky Mountains to Nashville. And then we basically we went a straight line south from Nashville yesterday morning. And we ended up right in the Panhandle. It's called Rosemary Beach. Cute little town, but it's 30 degrees here. 30 degrees. Did you know it could get that cold in Florida?
Is that normal?
I did. And because of the humidity, when it's cold in Florida, it's way colder than it is in the Northeast.
Really? That makes sense because it feels otherworldly out there right now.
When it drops down into the 50s in Miami, it's freezing cold. And in the 50s in the Northeast, it's actually not bad. Right?
I don't understand that because I thought the lack of humidity in like San Diego is why when it gets cold there, it gets really freaking cold, right? Because it's like a dry cold. No? I thought
that's science. I will say though,
I don't understand this. Whatever. Moving on.
I've never been here, guys. These towns along, it's called State Road 30A. They're just cute, tiny little beach towns. It's like nobody here. It's absolutely dead. We could barely find a restaurant last night. But the beaches are beautiful. And they're just like these villagey little towns. Really nice. So we're enjoying it.
Can we talk about Jared Wong last night?
Jensen playing. Yes.
Jared Wang. Wong or Wang?
So CES is like the biggest deal in tech, right? This is the conference. He was obviously the biggest speaker. Was he the keynote?
It was the keynote.
There you go. Of course, he's the keynote of everything these days. The stock ran up into it, pulled the excitement forward in terms of stock market gains, and then he came out and apparently delivered. So they're going to stick it to new all-time highs on the heels of the Jensen Huang CES speech. Love to see it. We talked about this. Why don't we just throw up the chart? JC, we talked all about this. I think we were pretty obnoxious about this. We were pounding the table in Breakout Multiplier and other products. Sean put a trade on. We were all putting trades on.
Yeah, 2 weeks ago.
Right. So we were looking at this pattern in Nvidia. We were looking at the other Mag 7s. We were zooming out on semiconductors and technology stocks. And we were saying, how could this be a top with everything else that's going on? Are we going to lose Nvidia? I said, no, that's crazy. Dug in at the VWAP from August 5th, rebounded higher, nice little shake there right before it failed the top. Reclaimed VWAP. Now we're at new all-time highs. Book it.
Literally making new all-time highs in the pre-market this morning. This chart, I love you, Strazza. I really do. And I get what you're doing here, but it makes my eyes hurt. All these lines and colors, and there's just too much in the morning for me. Can you throw up slide 6, please? This is more of like a morning view here. There's a lot going on, Strazza.
I don't like my chart, really? But the levels were.
For your purposes, I get it. It's early in the morning. Like I need something like this, right? I've only had like 2 or 3 cups of coffee so far. You know, this is. Can I get a witness in the chat, ladies and gentlemen? Isn't this so much nice and clean? Throw up the other one more time. Can we do in the wine world, we call it a side-by-side tasting. Side-by-side tasting. Can we do a side-by-side? Strazza likes my side-by-side tastings, actually.
You do a great job. Yeah. Look, the levels held. Rebounded higher. Another failed top that ended up being a great trading setup. Is the trade over? I think is the big question now.
I mean, if you go back to my chart, does this look over to you, or does this look like a classic patented William O'Neill cup with handle? I'm not like a cup with handle expert.
Well,
Some might even call it a cup and handle. I don't know. Is this one of those? Would William O'Neill, rest in peace, shout out William O'Neill, would he be proud of us, or would he be shaking his head in disappointment?
Well, it depends on what was your time frame, what vehicle are you in, right? What was your initial plan? Because we're in some Nvidia calls that expire in a few weeks, which are probably worth holding. And then I'm in some NVDL calls that expire Friday, and those should probably be sold immediately, right?
So your position and your hold on. So your position and the expiration of those derivatives is one thing, and that's totally valid. But that doesn't impact the question of whether this is a top or whether this is it, right? Like, forget your positions, right? I get what you're doing, and that makes perfect sense. You got to do what's best for you. I get it. Me too.
Mm-hmm.
Now, our positions aside, forget what we're doing. Just the stock alone.
Yeah.
Does this look like the end, or does this look like something new is about to get going?
This looks like next stop 200, baby. Let's go, right?
What did Jared Wang say yesterday? Jared Wang. What did he say yesterday? Did he make people happy? Because the pre-market, it's up pre-market. Like, what was so great about what he said?
A few things.
Isn't there like a BlackBerry chip or something? Blackbird chip?
Well, yeah, there is a new chip.
Blackstone.
It's Blackwell, first of all.
Blackwell.
Yep.
Something with driving.
And they announced a new project where they're building like a compact supercomputer that's using those Blackwell chips. Micron is working with them as a supplier. They talked up the autonomous vehicles with which they're working with Uber on that. They talked up having AI agents. He basically talked about a lot about AI, like robots. Like he said, robots are going to have their ChatGPT moment around the corner, like the AI robots. So I guess that's cool. What else did he say? He said autonomous vehicles will likely be the first multi-trillion-dollar robotics industry. Talked up a partnership with Toyota on that. What else did he say? I mean, the whole thing was an Nvidia party, right? So
it was like just a concert, right?
More of that. It was more. It's all more headlines like that.
Up for Nvidia.
More new chips. More new chips, more new AI, more new robots, more everything.
Was that a surprise for anybody? I mean, as somebody who knows nothing about any of these things, like that sounds about right. No?
Yeah. I mean, these speeches are very rarely have a surprise to them, right? People usually know what they're going to say.
Do they?
I mean, the market.
Why are people so excited to be there? Just because it's like seeing Elton John or like,
Yeah, for sure.
It's a big deal, man. Yeah. I would love to go.
Yeah. Who's cooler, Jared Wang or Warren Buffett?
Depends who you ask.
Right now,
I'm asking you.
I don't see Warren Buffett signing women's breasts.
This is true. Remember when they said that when Jared Wang was signing the
Jensen,
women's breast, that was the top?
God.
What?
It's Jensen.
His name is Jensen?
Yes.
It's not Jared?
No.
You're an
His name is Jensen?
Always.
Really?
Yes.
Spencer.
All right. Jensen. Shout out Jensen.
God.
I'm catching up on the chat. Good stuff here. AMD is spicy. What do you guys? What you like AMD?
I mean, listen, if you want to buy a piece of shit in the sector, this is the one you want to buy, right?
Yeah. So, like, I guess it comes down to how aggressively long do you want to be semiconductors? For me, right now, I want to buy every chip making.
Yeah, but remember, the AMD. This goes back to the conversations that we've been having in our meetings over the last couple of weeks, where you could buy the leaders, right, in the space. Or Nvidia. You could buy the trade where it's not a top. right? So if you're buying if you're putting on the trade of semis being not a top, AMD looks exactly like semis on a relative basis. In fact, if you want to throw up slide 4, AMD looks just like this. So if you want to play for the not a top in semis and you want to buy a piece of crap, AMD is that. If you want to buy leadership, that's a different trade. It doesn't make one better than the other. They're just different strategies, different trades. And I think we've agreed that both is the answer, right?
AMD's got some juice to it.
By the way, new
it's
6-month highs for semis on an absolute basis, new 2-month highs for semis on a relative basis. Shout out.
No, they look good. And there was a really big rotation day. We see this every now and then between software
Strazza,
and semiconductors.
did you really, and I'm not picking on you specifically, just the general you.
What?
Do you really think that semis are going to complete this massive top in the middle of a bull market?
I hate saying things are easy trades, but this was one of those trades that we were looking at.
A very well-defined risk versus reward. I think that's what you're getting at. Not so much easy as it was so well-defined, which means easy to you.
It's one of those, yes. Well, it was not just so well-defined. Like, these are semiconductors. This isn't just any group of stocks that we're talking about, right? This is the leadership group, right? They are the poster child industry of this bull market, right? They are the fuel for the AI revolution. This isn't, we're not talking about solar stocks here, right? So you have that. You have the fact that tech has been detrade. You have the fact that a lot of these semiconductors are really Mag 7 stocks, right? And that's a theme of its own, Nvidia and Broadcom. And then you look and you say, they've gone nowhere all year. There's been zero alpha here all year long. Are they not going to reassert their leadership, right, and become leaders again before this cycle's over? I think that would be very strange. So it's one of those setups that we were looking at saying, I can't own enough of this. I think the trade is still going. You look at some of these semiconductor equipment names, they're just getting up off the floor now.
Can we talk about sentiment? Or do you still hate sentiment?
I mean,
well, the S&P 500 is how far from new all-time highs? 1%.
Okay, and they don't like it.
How far is the S&P 500 from new all-time highs? The all-time closing high was 60.90, and we are at 59.75. You know, just under. I mean, we're just a nose hair from new all-time highs. Active investment managers are fleeing. Lowest amount of exposure in equities for these financial advisors since April of last year. And if you go to the next one, these are individual investors. So if you want to go back, go to the AAII.
Not just any. These are individual investors who respond to surveys.
It's about 300 boomer Republicans from the Midwest. And whether that's accurate or not, it's probably not exactly that. It's probably not exactly 300 boomer Republicans from the Midwest. But in my head, the way I approach the market, the way I use this indicator is by thinking, okay, these are 300 boomer Republicans from the Midwest. It's a great segment. It's not the world. It's very specific. There might be some younger people answering. I doubt it. There might be some people from the coast. Doubt it. It might be less than 300. And there's nothing wrong with people from the Midwest or boomers or Republicans, right? So I'm not picking on those. It's just what this is. And we know for a fact that historically, these are the worst investors on the planet. And we want to do the opposite of what they're doing. And with the S&P 500 right next to new all-time highs, they're in some of the most pessimistic levels they've seen in over a year.
Yeah, you're very well versed in all of these sentiment measures. Is this the organization where you went and spoke at?
I've spoken to them before. I spoke to them virtually. NAAIM is the conference I went to Arizona for. Yeah.
Got it. Okay. All right. So you met. You've
met
they are
people. Lovely people. The AAI people, I don't know them. I know the people who run the organization, and they were lovely, but I haven't met the boomer Republicans from the Midwest yet. The NAAIM, they were just like, nerdy financial advisors, like just, standard classic, just really nice people that love the market, like just like your standard,
I thought investment sentiment had skyrocketed along with business and consumer sentiment following the election. So I'm surprised to see such a low reading here. Was that say 64 or 54? I can't read. I'm blind. 64? 64. Yeah. All right.
64. Yep, that's the lowest level since April.
Middle of the road, though. It's middle of the road.
Yeah, middle of the road. Yep. Surprisingly bearish. You would think that that they would be more bullish. They're not.
Yeah. I'm okay with it.
No, I mean, listen, if you're long stocks, if you're betting on higher prices, you want these people scared and angry and upset and sad and all that stuff. And they are. So it's great.
Oh, that's funny. Did you rub honey on your mic before you talk to them? Get it? Because they're bears.
Hey, now. No, this is a true story. This is in 2023. This is, I remember the Heat were in the playoffs. So it must have been like May, maybe early June. And, excuse me. And so, I started my presentation. I was very bullish, obviously, because it's in a bull market. It makes sense to be bullish, right? And so I had everybody, and Andrew Thrasher was in the last row, trolling me from the back, but he was there observing the whole situation, and so he can attest that this was true. And I asked everybody to raise their hand if the S&P 500 was going to close higher or lower at the end of the year. The entire room said lower. And then I said, raise your hand if it's a bear market. Raise your hand if it's a bull market. Everybody raised their hand that it was a bear market and that the S&P 500 would close lower. The entire room. And then I'm like, well, I'm glad you guys feel that way because the dumbest money in the world agrees with you. And I'm going to spend the next 45 minutes explaining to you why you're so wrong. Fast forward 18 months, so it's not like a victory lap or anything like that. Just reiterating that these are the types of folks, as nice as they are, love them. They were fantastic. I love you guys, not hating. But we want to take the other side of you on a consistent basis. And we did then, and we are now. And we will in the future. So thanks. I'm not trying to be a dick, right? Like, I know it comes off kind of like douchey. I'm not trying to be a dick. You guys are just not good at this. So we want to do the opposite of what you're doing. It's just what it is, right? That's fair, isn't it?
No, I think that is fair. We have the data.
It's nothing personal, strictly business.
Hey, speaking of sentiment, anything good on the magazines lately?
I've been looking. Nothing that exciting. You guys see anything in the? You guys see anything in the magazines? In the old magazines? Not really too. Not anything too exciting. I did get a text message this morning. From a one Mr. Weiss, who has the Barons from right after the 1987 crash. And he saved it, and he took a picture of it, and he texted me this morning. Shout out Jeff Weiss. The fact that
that's very cool.
Talk about nerd alert. He saved the Barons from the 80s. I mean, that's something I would have done. I have stuff in the Great Financial Crisis that I've kept around that, like, decades from now, the young kids are going to be like, wow, look at this old guy. Still has this newspaper, Like, I'm going to be the Jeff Weiss of the future. By the way, our chat loves Jeff Weiss. People were freaking out when he was on.
Well, I went home for the holidays, and a couple different people told me how great that interview was.
Dude, he's the man.
Yeah.
I mean, he was there like when options trading first started. Those are some of my favorite stories. Do we have Kenny in the house, or can we talk about China quickly?
We have Kenny in the
house.
I
do have a magazine cover.
This is a Kenny. This is a Kenny name. So let's set him up here. Let's set up Kenny. All right, here we go. So we're gonna go slides 2 and 3. So we know we had the largest momentum thrust in the history of Chinese equities in late September. That's characteristic of the beginning of uptrends, not the end of them. So here on the y-axis, we're looking at the percentage gain since August 5th. That was that volatility spike. And on the y-axis and on the x-axis, we're looking at the percentage from 50-day high. And look at that big leader, KC. So this is Kingsoft Cloud. Throw up the chart.
This. Yeah.
KC, Kingsoft Cloud. So this particular name in China, $2.5 billion company in the cloud computing space, according to in software specifically, cloud computing, I imagine, according to people in China who we obviously cannot trust. So who knows what they do? They might not
God
do
only knows.
Who knows what they do? And like I said, they might not do anything at all. It might just be one big fugazi. And that's okay. As long as we can sell the stock at a higher price than where we buy it, I don't care what happens after that. It's not my problem, right? Would we all agree with that?
Yeah.
This is just a great chart. This one just looks different.
So
This
the level's 9. The level's 9, but how high can it go? Really, really, really high.
Did you throw up the bubble chart?
I did. Look at that
Yeah,
big communist flag right in the middle. Nice job there, Sam. The world needs more bubble charts. The world, I'll say it again, the world needs more bubble charts.
The reason that you say KC is a Kenny stock is because every day, every other day, or at least 2 or 3 days a week, it's gapping up or gapping down in the pre-market, right?
Well, I think it's a Kenny stock because it's like, it moves a lot. They're communists, so like who knows what's happening.
I mean,
it's like a Fugazi thing. Like the other day we were trading that quantum stock that isn't even a quantum stock. It just has quantum in its name,
It's the best kind of quantum stock. All right, Kenny's here.
If you go back and just show that base, that's going to be a lot of people's stock now because this is a brand new uptrend.
Maybe.
How about that?
Look at that thing.
Bring in Kenny.
That's the pattern. That's it.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
What you talking? You're talking communism? What's happening? Hello. Good morning, everybody. Welcome
Boris.
to
I
the
haven't
party.
seen Boris in a while.
It is time to party this morning. Good starting 1995. What is happening? What's going on, y'all?
I love it.
Yes, I love the KC. The KC is a Kardashian, is a Andy Dufresne Kardashian bottom stock. Hell yeah.
It is.
Yeah.
And is it more of an Andy Dufresne or is it more of a Kardashian? And what is the difference? Can you explain the difference?
Take a look at the chart right here. This is the 3-year VWAP chart. This is one we talked about this a couple of weeks ago. We talked about this coming out in November. There's that 3-year VWAP. But when you have that moment where it had a moment to try to get out of that bottom once before, so now you Andy Dufresne back above this top of that $10 spot. Fantastic trade right here, man. This is awesome. This looks like every other chart that we've been trading over the last 3 months. So phenomenal.
That's what I said.
I love it.
But
are you guys talking about the FUBU? I mean, just great action.
How about that, huh?
Right. That was a nice one. You know what I like the best one? I'll just get right into it. My trade yesterday, my favorite trade was that Sedge. We walked in, we were buying it on Thursday and Friday. We got the gift of a gap up on Monday. And as I tell everybody, when you walk in with a gift, sell half at least. So we were selling, Sedge right at the open. And it really was a great, example of the idea of why the fade works. When you come in and you see a stock that's everybody's excited about, we're looking to sell because that's the fade. Because generally stocks have been bought prior to the gap gets faded. But more importantly, after some chop, the stock actually became a short and we wanted to buy it back. So what we did is that we shorted it, and look at this beautiful stuff. This is multiple time frame VWAP at its best, my friends. So what you're looking at right here is a 3-day VWAP chart. So as it got through the 1 minute, that was yesterday, gets through there, and then through that chop, when it decides it wants to go down, we shorted it, and it went right back down to the prior day VWAP, and that's where we covered it. And wouldn't you know, we covered near the lows. We wake up in the morning and stocks back up $1. So we're still in the call spread that we bought on the dip, paid for by the short. That is the essence of how I became a trader, because as everybody knows, you buy a stock, you sell a stock, and it keeps going up without you, and you never buy it back. That's everybody's problem. So that's how I became a trader. Instead of selling my portfolio, I would just short the stocks on days of weakness or moments of weakness, and then still own the stock because, again, that's how I started the trade. And this is a perfect example of how my career got started. Shorting a stock that I own, which is why I do a lot of talking in the room. Because
this is also a great example when Kenny talks about like the rigging of the market. So Kenny, you were buying this Thursday, right?
Yes.
Obviously, you had no idea that on Monday morning they were going to come out and say, "Hey, yeah, we're doing all these cost-cutting moves. We're laying off this many. We're going to save X amount of money, right? We're going to recognize all these pre-tax charges, blah 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 blah. Right? All the things, all the positive numbers that like Wall Street likes to see. Oh, you're going to save money? Great, we like that. And so the stock blasts off. You didn't know that, right? But you didn't have to know that, right? Because you let the chart tell you 2 days prior to that, right?
Exactly. And then you see the rigging. Here you got a stock that's gapped up, breaking out, everything you want to see. And what does it do? It hits an exact whole number as if it's rigged. Half numbers and whole numbers and VWAP. That's all we trade. Whole number high. We didn't know 19 was going to be the high. And by the way, now if this stock ever does break 19 again, make sure you're buying it because it's a very significant spot. A failed break above 19. Next thing you know, the stock's right back to flirting with the breakout level. So if this thing goes back into the Andy Dufresne tunnel, we're going to have to give up on this one inevitably. Like the path trade just didn't want to work out. Not every trade's going to go, not every trade's going to go up 500% like a FUBU. It seems like every stock is doing that lately, but this is one of those stocks where we just got paid to short it, and now we own it for free. So perfect scenario. Somebody wants to talk about Mob. Big fan of the Mob. Not in much of it anymore, but it got to $5. That was our goal. I still think this stock's going higher because you got the Andy Dufresne, you got over the Kardashian, and if you could get over 666, I mean, this stock we bought it at $3.33 with the target of 666. This is some bizarre name. Again, this is one of those drone stocks. Still got a little bit of it. At $5, you should be down to the last 20%. Phenomenal trade. Phenomenal trade. What else you got? You got any other questions before I go?
No, you give me one more name.
You guys want to go? You want to get crazy? I know. Please don't hate me on this one, but like I did, I'm scraping the bottom of the barrel here. We're trading a penny stock today. XTIA. I know it has about 1 billion shares traded on it so far, and we just bought some. I know. You can laugh all you want, but XTIA. If you put an A and an I in the stock, I'm looking at it. And even though this one's dyslexic, look at what we're trading here. I mean, this is where we are. We are in the ninth circle of hell of trading. But when there's volume, look where it comes to.
It's traded 1.3 billion shares.
It came to the VWAP, and we said, hey, listen, we can buy the stock here at 18 cents with 1 cent risk. So we're in this stupid name, and it's just ridiculous. This is what we're doing right now. And, again, every day is an extravaganza. And I'm sure 3 hours from now, we'll be talking about 2 names that I never heard of, and we'll address that one as we go. ARBE, another one. Yeah, we threw that one on the list also. Yeah, just insane. It's just so much action, and that it's just like it's hard to, yesterday somebody was trying to say, can you explain to me why you bought that stock? I'm like, that was like 40 minutes ago. We're up to 8. There was so much going on yesterday. That's why it's like anybody who's missing Santa Claus, come over to our room. Santa's here every day. We're having a party.
Hitthebid.com is where it's at.
All right, guys.
Kenny. Well
Be
done,
careful,
as always.
my friends. Remember, in Soviet Russia, stock trade you.
And on that note, he's out of here. That was good.
All right, guys, listen, enjoy. Todd Sohn. Todd, love you. Thank you for being here. I'm out.
You can't
Adios.
leave before Todd gets here. Oh, my God, he just did. What is going on with you people these days? I know, Todd. That's what I'm saying. Oh, whatever. I still have Steve here, allegedly, and Todd. Let's bring Todd on the show. Todd was kind enough, as always, to send over a few charts, and he has tremendous ETF stats. So let's talk about all this and kind of what it means for the market.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey.
Where'd he go?
I don't know. There he is. Well, yeah, Todd, you ghosted me. I thought we were going to a basketball game, but
I know. I had a pack for a trip the following day, and I knew they were going to get blown out. So
yeah, you're right. It was actually a pretty boring game. I'm not going to lie to you.
Not a great year for Syracuse basketball.
Not at all. Anyway, good to see you. I can't say Happy New Year. It's too late for that.
No, it's over. It's over.
Yeah, it's over.
We moved on.
It's good to see you, I guess. I don't know.
Yeah. I hope you guys had a nice holiday too.
Likewise.
Where's Steve today? It's a different room.
I am in Rosemary Beach, Florida. It's a cute little town in the Panhandle.
Don't know it.
It's near Panama City. We're on our way home. Big road trip. So
No Marco Island, huh?
I think we're going to drive down along the West Coast. So we'll be over there tomorrow probably. But no,
Interesting.
the beach here is like Marco Island, though. It's got the white sand situation. It's just freezing cold.
Interesting. I had wanted to talk to JC about our Disney trips because he and I were there at very similar times.
So explain that. Did you overlap at all? Did you know?
No, no, I did not until after he had mentioned it.
Okay.
I think I missed him by like a day or two.
So is that like the week that everybody goes to Disney?
Yeah,
Because
it was mobbed.
okay,
Mobbed.
because
The anecdotal observations say go along.
It just depends on the state. Like in New Jersey, there's a statewide teachers convention
Yeah.
every November. So everybody in New Jersey goes to Disney World in November.
Yeah,
Oh,
we just somehow ended up there Christmas week. I don't know why or what possessed it. Was my son's birthday.
Yeah.
But
what's the best park, Todd? The best for you, and then what
best for me is Hollywood Studios.
Okay, Hollywood.
The
Okay.
best for the kids is Magic Kingdom.
Right. And what are their ages now?
6 and 2.
So they want to go on the rides?
Yeah, of course. And the easy rides, the kid rides, not the crazy rides.
For sure. All right. And Dad wants to go to Epcot and eat some
Obviously.
And have some booze. There's a tequila bar there.
All right, Todd, what's going on with these flows? Is anything going to stop these ETF flows?
I don't know. So listen, we had a record year last year across the whole ETF spectrum. 10 trillion in assets, 1 trillion in flows. We're about to cross 4,000 different ETFs. It's booming. And so I'm trying to figure out, okay, is this the new norm? Or is it also a consequence of both a major move to the ETF wrapper, right? Mutual funds are slowly ceasing to exist, and also strong market performance. I think it's interesting that the S&P 500 was up 24% last year. Same amount in 2023, and yet flows doubled, right? So that to me says is reflective of very enthusiastic sentiment, enthusiastic attitudes, and we can measure that different ways. You can measure it through option volume. Some of the survey data is bullish. The anecdotal observations are clearly bullish.
But
so
hold on, Todd. Is this the highest reading in terms of what you're looking at, like 12-month rolling?
Yes, this is just calendar year on this chart.
Okay. Is this the highest reading ever?
Yes.
Wow.
Yeah, for equities and for the whole spectrum too. Yeah, equities did 70 billion in inflows last year. 2021 was the prior record, and we remember that environment. It was off the chain. Took a breather in 22 and 23. Surprisingly, I think flows were an asset then, and now they're becoming more of a liability to me in the near term.
Yep. No, I like that.
So I pair that off with that. It's year 3 of a bull market. We're 3 months into it. And historically, year 3 is a little bit more choppy and inconsistent. That doesn't mean we can't go up 20 again, but I would just expect a little bit more volatility.
These are some frothy flows. There's no other way around it.
Yeah. And it's going all over the place, right? It goes to your typical large cap S&P, Vanguard type stuff, but it's also going to certain sectors, thematic areas, leverage here. Like this is another
this is probably not sustainable, right?
Yeah. And so this is a function of a bull market.
But why not? The market moves higher over time. Why wouldn't this sort of a relationship be sustainable?
I think it will keep moving higher. I just wonder if the ratio, the 12-to-1 asset ratio, might need to compress a little bit.
Fine. Yeah.
This is math because of the way leverage products work. When the market goes up 20% a year, those things run sky high.
And then they're the first to close.
Yeah, that too. Right, depending on what it is. The 12-to-1, 11-to-1 ratio, though, seems a little bit aggressive here compared to history. Now, some of it's also because the product space is just growing so rapidly.
Right.
but it also you just start adding these things up, and I'm like, okay, maybe we need a little setback. I don't know.
I'll play devil's advocate on this because this area, these leveraged funds, they've always been around, but there's been an unprecedented rush by asset managers to launch these things just this year.
Oh yeah. Yeah,
and that rush is happening in the context of a bull market. So they're launching more leveraged longs, and the leveraged longs are being favored by investors because prices are moving high.
Yeah, it's a bull market, and now you have single stocks, and you can get, if you're an issuer, if you get 1% on these things, if you hit one fund, you get to $5-6 billion. That's a windfall for your firm.
Absolutely. No, they're all doing it. And listen, I'm starting to change the way I think about these products. I've always been like a never leveraged fund guy. Some of these things are so liquid. Like we're in the NVDLs, the options chains, super liquid. You could buy calls in this and just like lever up like crazy. You could do some incredibly irresponsible things.
The firm that runs NVDL Granite shares, they now have an income product,
dude.
Which
just
came out. Yeah, they're covered calls on leverage. So, like, listen, if you know what you're doing, great. You're going to get serious freaking distributions on that thing.
I am surprised that the regulators seem to just be like, go for it. They're approving all of these things.
The toothpaste is out of the tube. It's just, you got to know what you're doing. It's like driving stick shift, right? If you don't drive stick shift, and now you get in the stick shift car, you're going to break the car.
I don't understand people who still want to drive stick shift.
I don't. That was the best analogy I could think of at the moment.
Yeah, but everybody has that friend like, I drive manual, and it's like, but dude, you don't have to. Why?
I don't know. That's where JC just went. He went to go drive his stick shift car to the grocery store.
You know what I mean? It's like making your charts with pencil and paper. That's cool.
Why? Yeah, why? It's cool, but
why?
To prove that you can, I don't know.
I don't get it. It's inefficient to me.
Derivatives are sick. I think is the moral of this story. Talk to me about the capping. What is this new iShares?
Okay. This is great.
I like this.
So the 10 largest weights are almost 40% of the S&P 500. Unprecedented in the data I have. I think you go back to the Nifty 50. Some folks have better data about that. The problem is some people are freaking out about that. It's been great for passive investors. It's great for us, right? But there are investors out there saying, man, that's a lot of concentration risk. Now, iShares, which I always like to follow what they file for because they're the biggest asset manager out there. They're the leader in ETFs. They filed for a S&P 500 fund that will cap weights at 3%.
Good.
So Nvidia will go from 7 to 3, and if it drifts, it'll reset at quarter end. And so I called this the capping because now they're coming with a solution.
Yep.
All right. Let's go above the light of the S&P 500. We're going to water down that.
It's not going to end there, is it, Todd? They're going to launch spiders that are capped also. They do that in other countries.
Yeah. Oh, yeah. And you've seen S&P start to peel back some of the rules and methodology of those spider indices, right? Because the tech one got all jacked up from those 3 names.
Yeah. Yep.
They had to fix the way it was tracking the underlying index. And you're going to see more and more of these, right? And this is different spin on it. This is like equal weight plus in a way.
Yeah, I was just going to ask, how is this different from, say, RSP?
RSP, everything gets a 0.2% weight, 20 basis points.
No matter what the size.
No matter what. And then it rebalances every quarter. This is going to say, if you are a 3% weight, you cannot go higher than that. So it's in between. It's watered down cap weight exposure because of this chart right here. You have 5 stocks that are almost 30% of the index and 10 that are 40. And if and when this ever becomes a problem, I think this is like PTSD from the tech bubble, right? When you had, well, not similar anymore, but that was the last major concentration risk episode. So I gotta wonder. And the cynical part of this, the funny part is that iShares just came out with an S&P top 20 ETF like a month ago, which was super concentrated, and they were pushing that. Now they're saying, all right, do the opposite.
Yeah, they're giving people options.
Well, both sides of the market, right? Well, I mean, why not?
It's both sides of the market. Which way do you want to go?
The top 20 is just a cap weighted.
Yeah,
top 20 names.
Top 20 names. It's like Mag 7 with those extra 12, 13 names in it.
They're just constantly going to be kicking one out and adding one, though.
Yeah, I got to imagine there'll be a lot of turnover in that like 15 to 20 area.
Yeah, right.
right? I mean, it is what it is. But I like what Larry said. Let's limit Jordan's scoring. It's not I don't love it, but it's interesting to me.
Todd Sohn many years ago told me that the best players should score most of the points, and that has stuck with me forever. It's so good.
It's true.
It is true. Todd, I love this list. I love looking at here. Let's make it bigger. I love looking at the biggest weightings from back in the days.
Back in the day, right?
Yeah. Oh, this is cool.
So if I had, so I did every 5 years just for sake of space. But if you put 99 on there, it has America Online, which I just
cool.
laughed at that. I laughed at that.
That's
and that was pre merger with Time Warner. But it's the S&P is this kind of like living organism. It's always evolving. It's just more so in recent memory, it's been stacked with these same 5 or 6 names. But you go back 15 years, look at the number 2 or 20 years rather. ExxonMobil was the second largest stock. Walmart was in there. And maybe it feels like this will never change, but inevitably I think it will.
To think that just 15 years ago, the names at the top of this list were Exxon, General Electric, Chevron, IBM, Procter & Gamble. There was almost no tech in there outside of Apple and Microsoft, really.
Procter & Gamble? I mean, really?
You know what's crazy about this is Microsoft was still a top 3 weighting for all those years.
It was big.
Where it was in a massive drawdown?
Yeah, Microsoft was huge back then relative to everything else. Suffered for a decade and now came back. But I love stuff. I wish I had this data further back because it would be totally fascinating.
It would be cool.
But like you can make we've looked at it where you can make out like the 80s were about telecom, the 90s were internet, the 2000s were financials and energy, and now you're in the kind of internet-ish or hardware software era, I guess you could call it.
Yeah, AT&T number 2 in 1980. Let's look. Here are some stocks that I've literally never heard of. Sears Roebuck, that's hilarious, in 85. But I've never heard of Atlantic Richfield. I can't.
No idea what it is.
Schlumberger was number 5
Yeah.
45 years ago. That's incredible. Standard Oil of Indiana, goodbye. Amoco Corp.
I'm not sure. I probably looked at these and been like, "What was that?" I don't remember.
They all merged. There's something else now.
DuPont. Yeah, a lot of those companies all merged and the conglomerates.
They merge. They unmerge. They spin.
I kind of can't get over Microsoft. So 2005, Microsoft was in a 77% drawdown, and it was the 3rd largest company.
Yeah. That is insane. Microsoft's like the original like behemoth, well, maybe outside of IBM, the OG behemoths out there. And they righted the ship, although a little dicey near term. I still think it's okay.
Okay, what else we got here? So moving along down these beautiful slides that you sent over.
We got quantum in there. I know, what was that? Alf said something last night.
Anyway. Alfonso?
Something about quantum last night. Here's so you guys got to get Sylvia on the show here. She runs Defiance.
Sure, we can do that.
She runs Defiance. This fund is the hot money right now, the hot momentum.
So what is it?
So I don't know. Quantum is like the next wave of AI. Basically, these companies, from what I understand, are creating or making the tech to help process things even faster than they normally do.
Yeah. So this is just quantum stocks and QTUM.
So the top of the fund has INOQ, RGTI, and QBTS. Sorry, and then the rest of the fund has a lot of more staples in it, like IBM and Nvidia. So you're getting the speculative quantum stuff along with more established AI, which I think is interesting and a neat way to construct the index. And all of a sudden, this is the interesting part about ETFs to me, is that you can go from having no flows, no volume. A headline comes out like, "Oh, Alphabet is investing in quantum computing," or something like that, and all of a sudden the ETF just takes off.
It's over, yeah.
And you can see their assets. The assets have gone up almost to $1 billion, right? 800 million or so right now. They were a year ago. They were like 200 million.
Out of nowhere. Yeah. It's incredible.
So,
This is the hottest theme in the market for really was all of Q4, and it hasn't stopped.
Yeah. And it may this could blow up. We don't know. This is where the technicals come into mind here. If you're going to get long this thing, make sure you keep the leash on it because it's volatile.
And then, so there's another one also. So this is Defiance Quantum, and then go to the next slide, Spencer, or the next page. And then what is this?
So this is a little less volatile. This is going to be more REIT oriented. Actually,
It doesn't look as good. Yeah,
I think I have the wrong ticker on there. It's my fault. But it's data and digital infrastructure. So the companies that need to house servers and hardware for AI. That's the way to play it.
These are the data center REITs. Yeah.
This is not going to be as much of a momentum and Deegan type trade. But if you're looking for AI exposure that's outside of just tech, here's a route you can play it. And the AM's starting to grow there, 150. A little inflows recently. I think that's an interesting way to play it. And then the other one's nuclear.
I love this. Yep. NLR.
Now, I mean, URA is kind of the OG from the nuclear space. NLR, the difference though there is they have more Utes in it. Like I think like a Vistra and Constellation Energy.
That's good because you want those. Those are
exactly. Like it's not going to be strictly uranium miners like a Cameco. You're kind of getting a broader space here, is what Van Eck did. And again, it had volume for a while and then it just exploded again. Exploded last quarter and the assets rise. I think it's just super interesting how some of these products just come into vogue like that.
Just look at the last 3 candles in NLR.
Yes, you got, and listen here, in the technical base, you got oversold. You hit the 200-day and you responded.
Yeah.
If you roll over from here, I get more worried. That would tell me, okay, maybe a little bit more distribution top is settling in.
You know what? When you zoom out on a lot of the charts that are going to be in this index, whether it's CCJ or NXE or UEC, these uranium names, zoom way out. They're massive bases.
Yeah. They've been off out of all of a sudden. Nuclear became a thing.
Huge structural bases, though, and those patterns can take time to leave the station. They could be really sloppy, right? Full of false starts, and shakeouts and whipsaws and all that jazz. So that's probably just what's going on. But once these bases complete, I think it's go time. I think this is a mega trend.
You want megatrend? We are in a megatrend.
The word megatrend always makes me queasy, but I agree.
You're bringing the megatrend charts for us today.
I know. Megatrend to me is like, all right, it might work in 20 years, or maybe it doesn't work.
Well, Todd, would you say this? Are we not in an ETF megatrend? I mean,
we are.
It's sort of.
Yeah, that way, yes.
It is. Here, let's bring up this chart. 100 new ETFs launched in December alone. Yeah. This is not even bull market behavior because this kind of thing is immune from market cycles. Because in a bear market, they would just launch a whole bunch of bearish stuff. Right?
Yeah, exactly. Yeah, it's kind of a moment in the cycle. Yeah, 100 new ETFs last month. Keeping track of this is becoming extremely difficult. And so the 2 ways I split, these are clearly not all the ETFs, but last month you had a lot of active managers, your traditional active managers enter the space. Allspring, First Eagle, right? Allspring had not been in the ETF space. And then the other side of it, along with the leveraged single stocks we were talking about, now you're just putting it on different assets like corn and wheat. 2X corn, sure, why not? Who needs it? Well, I don't know. Maybe JC needs it.
People are coming to us offering to launch ETFs.
Yeah, because it's the barriers to entry are super low, right? And you just need some cash, a good idea, and there were people who set it all up for you. And it's
we've learned that back test it, they'll create you an index.
They'll do everything. And if you can get there's a lot of good ideas, there's a lot of stupid ideas. And the stupid ideas go away pretty quickly.
You can just put it out there, let the market decide for you.
Yeah, I mean, but if you have like a legitimate basket that you run every month, and the process is rock solid, where you're not going to deviate from it, then like that can work. Especially if it's a little bit different in a portfolio, like a solution. What's the solution being offered? That's really the key there, rather than saying like, all right, here's my whatever fund.
So there's no signs of this, ETF boom slowing. when you think of all the new ETF launches, do you think about the IPO market? Do they have anything to do with each other? That really two different things now.
Yeah, I don't. The IPO one's tricky, right? Because the companies are just staying private, right? Which private assets are eventually going to end up in an ETF, for better or for worse. I know there is an IPO ETF out there. I don't love it that much because they changed the method.
Their use of IPO is liberal.
Liberal.
Right.
They changed the methodology from 2 to 3 years, I think, recently,
Great.
a couple of years ago, and it's like 3 years post IPO. It's stretching it.
No, that tells you something. The IPO market's so dry that they had to.
I asked my buddy the other day. I said, "What's the biggest IPO on deck this year?" And I was like,
"SpaceX." I thought.
Is that? I don't know if that's. I have no idea. That would be a good candidate. Other than that, I have no idea.
They've been staying straight for years. I don't know if it's ever going to go, but
that would be huge too.
I mean, these are like ETF. They're not IPOs, but they're IPOs in a way. New ETFs. You know what I mean?
But the point you're making is that a lot of these companies are staying private so much longer. I mean, right, by the time they come out, what's it going to be?
You won't even go to a small cap index. You go to a large cap index. I don't know, is Kava in the Russell 1000 at this point? I'm not even sure. It might be.
Are they that big? What is this Kava thing?
Done well. But yeah, they stay private. And when they go public, they're a large cap. So the small caps miss out on it. And there are no new IPOs for anyone to invest in. And eventually they're going to start stuffing these companies into ETFs. You can actually buy an ETF out there that does have private equity in it. It's just very limited and watered down.
Before we let you go, Todd, I want to just touch on international. What are you seeing in terms of ex-US flows? Because there were some nasty looking potential tops out there. A lot of these diversified European index, just the diversified ex-US indexes, whether it's EFA, VGK, the FEZ, which I think is the Euro stocks. They're digging in.
Trying.
Buyers up. But what anything from a flow perspective
Europe
here?
is the interesting one to me. I think there's a really low bar for Europe. Flows are kind of dormant. There are no new European products outside of one European luxury ETF. And I'm like, okay, that's interesting. But then I'm like, it's Europe.
Right.
It never works.
So nobody wants these stocks because they haven't worked for our entire careers for a lot of us. They've been underperformers, literally, consistent underperformers for 15 years now.
I want to add Europe exposure. It's just super frustrating. Now, maybe the luxury names are trying to bottom. Hints of life, trying the autos too, but they're still pretty ugly.
But think about what you're saying. That's the basket that you're buying, and that's just not appealing to most investors. You're sitting here talking about luxury stocks and automakers, like we're buying super chip makers. And
so here's go through the Eurostoxx 600. The 100. I did this yesterday. Yeah. The 100 largest names in the Eurostoxx 600. How many of them were?
So this is their S&P 500.
How many of them were founded in the 21st century?
I don't know, less than 5%.
You know what I'm saying? Whereas we have in the US, Facebook, Meta, Alphabet was, I don't know what year they founded it, but it was late 90s, early 2000s. Tesla, and Amazon was like 97. Okay, so maybe not 21st century, but close. All the European stocks are from like 1870. You know,
it's a great point. Look, they're old economy.
The only
stocks.
one is ADYEN, the payment name. Adyen.
Oh, Adyen.
Not like
Adyen.
Yeah, it's not a huge name, but it's in the top 70 maybe. Yeah. And that one's been all right. It's a payments name. Other than that, it's like spin-offs and mergers and old. I think that's why.
No, it's strange. It's strange that tech companies don't start over there.
I mean, they have a couple of semis, but they're from back in the day. Strange. It's an interesting exercise, though.
Eventually, those stocks are going to work, and nobody's going to be ready for it. The positioning is going to be so offsides. Like you said,
that is the best case I can make for Europe, is that nobody's there. It's opportunity.
It'll happen.
It's opportunity cost. It's like energy and healthcare right now. it's really interesting because nobody's there.
But it's got to happen in an environment, right, where value is outperforming growth.
Man,
Good
I
luck
don't
with that.
I don't. Yeah, that's all. That's the best I got for you. We know the extremes. We know it hasn't worked. Are you willing to put?
Listen, there's
how much risk do you want to put on that?
There's a lot of people out there, a lot of smart people out there, pushing the narrative that like value never outperforms growth again.
Yeah,
ex-US
there's interesting anecdotal observations. The rest of the world, by the way, Japan's all right. India, a little dicey.
I told you they were going to flow out of India.
And
Had to come from somewhere, Steve.
China just blah to me still.
Yeah. All right. Todd Sohn joins us every month on the show. We always appreciate it. He always brings great charts, and
I appreciate
I'll talk with this stuff. So
thank you.
Thanks,
guys.
Todd.
You too.
Good to see you, my friend.
soon, okay.
all right.
Later.
All right. Steve, let's hop a few minutes early right now. I did want to mention we had a merger this morning of two very beaten down names. We have a merger of equals between Getty and Shutterstock. So SSTK and what's Getty?
These are like stock images.
GETY. Yes, exactly right. It's a stock image merger. It's an all stock. Yes, stock. You get the idea.
I know what it is. We have a studio. I know about these things. We're a lot of tech
That's
people.
right. That's right.
We're a tech heavy company. We are one of those US tech companies that we're talking about.
Sure.
Right?
Sure. All right. What's the deal here? We breakout multiplier members. Stay tuned to your inbox. You'll be getting a video a little bit later today. What else do we have? We have. Are you doing a flow show today, Steve? You don't think so? Okay,
I don't think
you're
so.
on the road. Makes sense. So that's what we got. As always, thanks to our guests. Thanks to Sean. Who's Sean? Thanks to Todd. Thanks to Kenny. Thanks to you guys in the chat. We appreciate you. You guys are here before we even go live, and that's always fun. So without you, we'd be talking to ourselves. So it's always fun to engage with you guys. Smash the like, subscribe to the channel, get notified when we go live, do all that good stuff. And we'll be back tomorrow morning. Tomorrow's guest, I'll tease you guys a little bit, Ryan Dietrich. So Ryan Dietrich's on the show tomorrow. Gonna be good.
Oh, that's great. That's a treat.
All right. See you guys. Go make some money. All right.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah,